Good afternoon. This is Ken Long of Tortoise Capital with a potential trading insight from the live trading room, July 13th, 2015. So we're looking at Lilly, and we noticed that we have yesterday's close here. We have a nice gap up, and then it opens here. In our trading day today, we put half a frog box on either side. We took the long, cashed. We had a Z3 pinch. We took the short, cashed. We bought one long, two long, sold up here, cashed. A pretty good day. And so as we were studying the chart, we looked at this interesting confluence of indicators. That while Lilly was off and running all the price and the Bollinger Band mean at this point are above the VWAP. Couldn't hold above the VWAP any further. The run was done. When the river crosses back underneath the VWAP, here, we said let's take the VWAP plus yesterday's close divided by 2, find the average. That equaled the open. Let's draw that as a fair value for the day. And now at the moment of failure, when price collapses below the VWAP, let's estimate half the distance back as a reasonable target. That gives us an idea to follow up with as we look at some intraday trading tomorrow when we look at the VWAP. Now here's another insight on the VWAP we want to share. That's a picture of an early bird getting a worm. Apropos of nothing else, but let's take a look at SPY. We're going to look at a daily chart, and we're going to add a moving VWAP 30. We're going to make that orange, and we're going to make it big and fat. And what I want you to notice is that the moving VWAP 30 is, for all practical purposes, the middle of the river. So when we're thinking about the fair value on any swing trade, objectively, you're not wrong if you estimate a return to the mean as the long-term fair value. So when we see opportunities here, when we have a regression line fractal framework difference of opinion, the 270 is at 212, the 10 is down here at 204, the Bollinger Band mean and the moving VWAP are in the middle. What you can see is that extreme moment we have a tug of war between the long-term holders and the tactical traders with the Bollinger Band mean right in the middle, and tension was resolved right to the Bollinger Band mean today, which looks like fair value. If you look back at other moments in time when the Bollinger Band mean, the VWAP, and the RL270 are all together, that's the last time we had fair value around 208. So let's look at this as a tug of war between the 10 and the 270, with the adjudication being the moving VWAP. But this is an important piece of information that we have now for swing trading that says what's a not unreasonable estimate of fair value in the eyes of the market. It's the return to the Bollinger Band mean. Things want to go back to the river. That's where the water is. So, thanks for your kind attention. Keep trading.